Welcome to our Croner Taxwise webinar programme. If you've got any questions at all, make sure you call the tax or the VAT advice line. If you're not a client, give us a call on the number on the screen.
Hello, my name is Pat Noun and this is on behalf of Croner Taxwise. One of the reforms in the area of corporation tax that is mainly welcome, that we'll be seeing next year, is on company losses. They talk about there being two major reforms here. The first is to enable a more flexible use of mainstream losses in a company. The second, though, is really only going to be applicable to much larger groups and companies, and that is to restrict the amount of brought forward losses that can be relieved against profits. So let's deal with the former mainly, because that is probably what's going to be of most interest to the majority of you. So currently, the rules for company losses are quite bitty. If I have a trading loss, as well as being able to offset it in the current year and carry back, and those rules will not change against my other profits, so any other profit, whether that be a different revenue profit or capital gain, those rules will not change. When it comes to carrying forward a trading loss, I can only utilise it against a trading profit. Similar rules or restrictions apply to other types of revenue losses. So other types of revenue losses would include non-trading deficits on loan relationships, property income or business losses, management expenses, excess management expenses for investment business, and occasionally we'll also see non-trading debits on intangibles. Probably the most important of the others is probably the property loss. Normally we can carry forward the property loss and set it off against other profits. So that's not quite as restrictive. Certainly other profits in the next year before then actually carrying it forward against maybe property business income in the future. So that's not quite as restricted as the trading loss, but nevertheless it's a little bit more flexible. Nevertheless, we have to remember which of the losses we can carry forward against their own type and which of the losses have some flexibility in their ability to use against other sources. Before we go any further, I think it's appropriate to mention, in respect of what I'm going to say next, that the flexibility rules that we'll have in the future do not apply to capital losses. So it's only revenue type losses that we are giving new flexibility to, or we're gaining flexibility on, rather than capital losses. Capital losses can only be set off against capital gains and can only be carried forward for that purpose. There is no carryback facility. So, going forward from 1st of April 2017, any loss of a revenue type that is created on or after that date will, on carry forward, be able to be used against taxable profits of a company. So in other words, everything will go into one pot, apart from capital losses, and we will be able to carry forward against taxable profits in the future. So that should enable the earliest use of losses, and therefore is very welcome, because that's important obviously for cash flow purposes. So no change to current year relief rules, nor carry back. It's simply the ability to be able to carry forward losses flexibly that changes. What about old losses? So what if I've got an old trading loss brought forward? Well, unfortunately, that can only be used against future trading profit. So because that's more restrictive, we'll be seeking, the rules will have a priority pecking order, if you like, but that pecking order, of course, quite sensibly, will ensure that a old trading loss brought forward will be set off against trading profits, and then newer revenue losses that are created can then be set off against future taxable profits. So that makes absolute sense. When we move this to a group context, it's even more welcome, the new flexible losses. This is because currently, although there is a group relief facility, and for that we'd have to have a 75% relationship between the companies in terms of effective interest in shares and assets and profits. And that, for that purpose, will not change. Currently though, Company A says has a trading loss. Whilst it can relieve that trading loss to Company B or Company C in the group for use against their profits, can only be used in the current period against the same matching period. So assuming all the companies have got the same period end. So what we'll be able to do in the future is that any surplus trading loss, say in Company A, carried forward, but only again losses arising from April 2017, we will be able to carry forward and use against group taxable profits. So having more companies to be able to relieve those profits again is extremely useful. Now, in terms of the ability to carry forward losses, we're obviously going to have detailed records in terms of both old and new losses that can be used to ensure, of course, that we are able to use them in the correct manner. Now I'm going to come on to the second aspect of the reform. Some groups, of course, might actually incur some very significant losses going forward. And HMRC are keen to ensure that in their ability to be able to relieve these losses flexibly, that there will be a cap on the amount that can be used. Now, every company or group, so in a group situation there will only be one, will get a £5 million allowance. So we will be able to use £5 million of brought forward losses according to the rules of set-off without a question. However, when we're starting to talk about bringing forward much larger losses, let's say 10, 15 million pounds, etc., then there will be a restriction as to the percentage of use against the profits. Now the percentage has been set at 50%. So let's just say, for argument's sake, that we're carrying forward an old trading loss that can only be used against a trading profit. And the group have already used their £5 million allowance. Then we'll only be able to relieve 50% of that trading profit with brought forward loss. And similarly, if we were looking at new rule application, we'll only be able to relieve against 50% of the taxable profit. The idea behind this is that if we have a group that maybe incurs very significant losses and then goes to very significant profitability, that as it's coming to profitability, that it should actually pay some tax on its profits. There is not going to be any restriction in an ability of a company or a group to be able to use its current year losses against its current year profits. This is all about how we utilise brought forward losses. In the more complex situations, which in reality will not apply in the majority of client situations, there will be a detailed procedure that will have to be gone through in order to ensure that the losses are dealt with correctly. And no doubt there will be further examples issued by HMRC to show exactly how it might work in more complex situations. But by and large, this is a welcome move because it does actually, for your average OMB company, simplify the way in which losses can be utilised by allowing all brought forward losses of a revenue nature to be set off against taxable profits. So that will be all on that subject for now. Thank you very much.